Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for November 1st, 2020. Hope everyone's having a great weekend so far. Let's take a quick look at how things finished off on Friday. We did see a pretty significant sell-off, albeit a pretty decent rally near the end of the day. Now, the Dow Jones Industrial Average finished lower by 157 points. But if we compare it to this previous low, you can see we closed right there, right at that low. So we did dip below there intraday, but then bounced and closed right at that level. The S&P 500 was lower by 40 points, and it did not get back to those lows. It's very close, but hasn't gotten there yet. The NASDAQ 100 lower by 274 points on Friday. Also, still a bit of room there to go before we reach those lows, but certainly on its way. And the Russell 2000 also having a down day, finishing lower by 23 points. If we look at the bond market and TLT, we'll use TLT as an example here, the ETF for the 20-year Treasury. They were also lower, actually closing out at the low of the day here and giving us another short set up here. So we should expect bond prices to continue to drop here. Excuse me. Crude oil. Let's have a look at crude. Crude was down as well, down 45 cents on Friday. And these lows that were here, and there we are, we're right back at them again. In fact, yeah, we went close just under there, but treat it as a zone. So we're right there. You know, we need to push a little further here, but it certainly looks like we're about to retest those prior lows there. That'll be significant for crude. Gold here also actually was higher on Friday, up almost 11 points, but is also very close to these prior lows. So we got to keep an eye on this as well. The dollar index on Friday, let me just bring up the chart for you here, continued to bounce, actually closing out near the high of the day, but we need to see it take out this previous high here. It comes in around 95. Above there, we should get a decent run. So it's still in that channel here, but having a decent day on Friday. If we look here at the main ETFs for the different sectors of the market, let me just bring that up here. Give me 1 second here. Let's look at, actually, let me go to the custom, and it's the main sectors that I want. There it is. Let's start with XLB here, materials. And, you know, not a bad day overall on Friday, but certainly not looking very bullish right now. Significantly below that flat 20-period moving average and very close to these prior lows as well. Let's look at the communication sector. Similar picture, back below that 20. Not much in the way of momentum, getting close to those lows. Energy, you know, pretty much near those lows of 22 or those March lows, but not quite there just yet. And financials, again, in a range here, we see this a lot, especially if you look at the individual bank stocks and so on, but certainly closer to those lows than we are to the highs of that recent range. Industrial, same thing, sitting right at those prior lows. So we're right at the tipping point here. Technology, ETF, same thing, right back at those lows. And consumer staples, same thing. We actually dip below intraday, but then close right back at those lows. Real estate sector at those lows. I mean, it's very, very common theme here. Utilities doing a bit better. And actually, utilities, I would look for a long setup coming up here soon. We did move above this previous high. We moved out of that range, and now we've come back with three orderly bars, right back to those highs. So I would expect a bounce here soon and look for a potential long there. Healthcare sector, right back at those lows. and consumer discretionaries are pretty much there as well. So, very common theme. Now, looking forward this week, it is all about the election, obviously. We are one day away. I'm certainly not buying anything on Monday. I think we've talked about this over the last few chat sessions. It is all about protecting yourself going into that election. Now, obviously, for those of you who are a little more aggressive and want to speculate, there are many ways to do that. You can pick up a straddle. You can look at volatility instrument like the VIX, for example, or UVXY, that sort of thing, to look for a pop one way or the other. But we don't really know what the outcome is going to be, regardless of what the polls show, and we don't know what the reaction is going to be afterwards. The best guess would be expect wild swings the night of the election, and of course, if there isn't a clear winner, and I think there has to be a winner, by a landslide to really make it convincing, because if it's anywhere close, it could be disputed one way or the other, or this could carry on with, those mail-in ballots continuing to be counted throughout the week, that sort of thing. And I think the more uncertainty there is, the bigger the reaction will be with the markets, the more volatility there will be. But right now, the most unsettling thing is that we hear that companies like Walmart have pulled, guns and ammo off their shelves in anticipation of civil unrest. We hear a number of stores boarding up their brick and mortar locations in anticipation of civil unrest. And hopefully there isn't any of that. Hopefully it is a very orderly, peaceful election with a clear winner announced on Tuesday evening. But barring that, I think we should expect a lot of volatility and some crazy swings. So be careful. I can only tell you what I'm doing. And what I'm doing is going delta neutral on pretty much every one of my positions I hold on to. So I am just trying to get past that event and then reevaluate once we're out of that event. But I'll certainly do a scan before we go live on Monday at 1 p.m. Eastern for our next chat. But I'm just being upfront. I won't be picking up any positions ahead of the election and going delta neutral on just about everything else that I own. Now, aside from the election this week, on Monday we will get the manufacturing PMI number and construction spending number, along with total vehicle sales. On Tuesday, obviously the big night, the election, but we'll get the Red Book report and we'll get factory orders as well. Wednesday, we get MBA mortgage apps number, and we get the ADP non-farm payroll number. So the employment report will be this week. That will be interesting for sure. We get ISM non-manufacturing. We get crude oil inventories as well on Wednesday. On Thursday, we get jobless claims. And we also get the Fed's decision on interest rates, okay, which is huge. And also Friday, the big main jobs report along with wholesale inventories as well. So it's a huge week. We have earnings season continuing. We have the election. We have the employment report, and we have the Fed's decision on interest rates. So, best guess is a lot of volatility here. So be careful, navigate your way. We will be with you Monday, Wednesday, and Friday for the live chat. So I hope to see you on Monday at 1 p.m. Come out and join us. And again, we'll look forward to all these events. Try to enjoy the rest of your weekend, but that's about it for now. We will see you on Monday. I hope to see you there. Enjoy the rest of your weekend, everyone. Take care.